No one wants to reach retirement only to regret missing out on opportunities to boost their pension. Yet a new report suggests that's exactly what a lot of us are doing. Nearly 5 in 10 people say they'd wish they had put together a better retirement plan or even taken financial advice. Here to discuss is Peter Sashecki of Everything Financial. Good morning, Peter.
Good morning.
How often do you get clients or people who talk to you about their finances who, wish that they would have done something different when it comes to their retirement or pension? Yeah. How much time do you have?
Yeah, every day. I mean, every day that's the most common question is, should I have done this? Could I have done that? But a lot of times it's not as bad as people think. The problem is, you alluded to, people just don't know. So finding out where you are, what your position is, and what you need to do is just as important. Just getting you on the right track.
Yeah. Okay. So pension could be, when you're getting your pension, when you're actually getting the money, could be a regular monthly income or something called commuted value, which is like a lump sum payment. What's the difference and which is better?
Better is based on your situation, but commuted value, you have to choose that before age 55.
Okay.
So if you're looking at retiring early, then you get the money, you decide when to start taking the money, you decide how much you're going to take within reason. There's a few limits in there, but it gives you control of your money versus a pension, which once it's chosen, that's it. You can't change it. And unfortunately, the help you get from the pension department is what's in their best interest, not what's in your best interest.
So you're saying that the commuted value is...
If that works out to be able to retire at 55, and a lot of people are doing that right now, taking the commuted value, retiring at 55, you got a long way to go, don't worry about it. And
that's so long.
Yeah, taking that value, and then they're going on to do other jobs because there's so much demand out there for those workers who are veteran workers, seasoned workers, but who know the job, that they can make more money by leaving, putting that commuted value into an investment, letting it grow, and then going and doing another job.
So a lot of investments have fees attached to them. What's the investment return on a pension?
It's generally about 2.75% to 3%. And a lot of we talked many times about portfolio management companies. A lot of these portfolio management companies manage the pensions. So your money is, people say, oh, it's way safer in a pension. It's still invested the same way, but you're not getting a lot of the money. The rate of return you're getting on your pension, how it's invested, is so low because the rest is going to the pension administrators, all the pension boards that run the money, and it's not going into the pocket of the worker who's receiving the pension. And that's why you can work and work and work, put hundreds of thousands of dollars go into your pension, and you go, it just went up $75 a month. Like I did all that for an extra $75. Yeah, take control of your money. Start looking at it early. And if you're looking at that commuted value, you really need to start looking about age 53, age 54, a couple years before you're going to take the money so you can make an informed decision.
Okay, good information. Let's talk about joint and last survivor pension. What is the difference for those and what's the risk?
Well, that's the risk there, where commuted value is no longer an option, let's say. You're taking the joint and last survivor pension. So what you're doing is you're taking, as a worker, less money to make sure you leave your spouse a certain amount of money. And that sounds good on the surface, and that's the most pressure given to you by the pension department. But what if, unfortunately, your spouse passes before you? You've taken less money on the thought that you're going to leave some to your spouse, except your spouse has passed away. You can't change your pension. Try and always look early enough at taking the single life pension, which means you're leaving your spouse nothing, but you insure your pension. To leave your spouse the insurance instead of you taking a lower pension and your spouse also getting a lower pension, there's so many options. And these last survivor pensions, I've seen on pension selection forms, 12 to 14 different options. Try and navigate through that one. That's if you don't know what you're doing.
Oh, yeah. For sure. That's where you need some help. Yep. Good advice this morning. Peter Sashecki with Everything Financial. Thanks, Peter.
Thanks, Carrie.
And you're right, I have many, many more years until I retire.
Lots of years left.
Yeah, lots. Thanks, Peter.